Hello, beautiful people. This is Jessica Jones with Taurus Financial Solutions, coming to you today with a quick little conversation on proposed tax changes. I've been getting a lot of questions about this. As of this recording, it is the end of May 2021, and I just want to address a few things. Nothing is set yet. There's just some proposals that have been made by the Biden administration, and this is not political at all. I'm just trying to give you a quick little rundown on some of the changes, the proposed changes, and kind of what to be watching for, because I'm getting a lot of questions from clients worried about what are the implications of this. So in a nutshell, I won't go into a huge detail because, like I said, it's all speculation now anyway. It's all just proposed changes. Nothing has gone through, nothing has been voted on, nothing is happening yet, okay? But the main couple things that I will address, I mean, it has a lot of other aspects to it too, such as more child credits and rebates and things like that. I'm not really going to talk about that. Really, the main things that my clients are concerned about really are the implications on the capital gains taxes and also implications on like estate taxes. So that directly affects obviously your retirement planning, which is what I specialize in, of course, and investment planning. So that's kind of what we're going to address today. So really proposed, the main things to be aware of, number one, can it be retroactive? Yes, it can. Most people seem to think that is highly unlikely that the tax changes will be retroactive to the beginning of the year, but it is a possibility. Probably unlikely, but it is a possibility. So there's three ways that it could go, or proposed ways it could go. It could be the tax changes could be retroactive to the beginning of this year, 2021. Number two, they could be in effect when Biden signs it into law. Or number three, they could go into effect January 2022. These are all proposals. Again, nothing's in stone. Mainly the capital gains part of it is kind of iffy to people. Now remember, it is going to be an income level that it will be dependent on. So depending on your income level, it may or may not affect you anyway. But the bottom line is capital gains right now, taxes are max out at 20% for the highest income earners. And then it steps down 15%. It just depends on how much you're earning right now. The proposal is that the capital gains taxes are going to go up significantly, especially for high income earners, from 20% all the way up to almost 40%. It's like 39.6% on your capital gains taxes. So that means in your investments, if you are making money in your investments, which is what they're supposed to do, then when you realize those gains, you are going to pay double the taxes on those gains. So that's a significant change and will impact many people that are in that income bracket. The other thing too is a lot of proposed changes for estate taxes. So this is really going to be impactful to your trust planning, your estate planning, going over those things with your attorney, whoever helped you do your trust, especially if you have a sizable estate. Depending on your particular state, obviously that has a lot to do with it too. So there's a lot of moving parts in this. Those are the main two things I wanted to address. Like I said, nothing has been done yet. These are just proposals. So we'll see what happens, how it all shakes out. It'll probably be, some compromise of all the things in the middle. Hopefully it doesn't go retroactive, so you can actually have some time to plan for it if you do have a sizable estate or sizable capital gains, or you'll be affected by this. If you want more information, we can definitely talk about it. Call me, email me. It's taurusfinancialsolutions.net. Again, nothing has been done yet, but these are just some of the proposals to be aware of and to watch for. Jessica Jones, taurusfinancialsolutions.net. Thank you so much for listening as always, and have a beautiful day. Cheers.